The SPY climbed a little bit today on the hopes that we finally might have a plan in place with Iran. The final draft of the U.S. Iran agreement has been reached with the mediation of Pakistan, which is expected to be announced within the next few hours. Further details, let's go read the details. Expected in the final draft, immediate and comprehensive ceasefire on all fronts. All parties mutually agree to refrain from targeting infrastructure, freedom of navigation in the Persian Gulf and the Strait of Hormuz. Sanctions will be gradually lifted. Negotiations on outstanding issues will begin with a maximum of 7 days. Iran's president is leading the efforts to restrain the IRGC from overstepping on political and diplomatic policymaking. The agreement is expected to be announced within a few hours. All right, well, maybe, just maybe, we'll finally get the deal this time, right? Let's go to the daily chart. I feel like every time we turn around, every inkling that there's any sort of market pullback, oh, Iran's coming, no, we got a peace deal, oh, everything's fine, right? It just feels like the same story over and over and over. This is huge. U.S. oil prices just erased all gains and turned negative on reports the U.S. and Iran are close to closing in on a deal. Every energy position you're holding right now is getting repriced as you read this. Okay, that is actually a very interesting point, and one that we've been talking about for a while, right? With the Strait of Hormuz and everything that's going on, prices have been hovering around this $100 level since March 9th. So over 2 months now, pushing 3 months now, hovering around this $100 level. Everybody is paying more for everything, it feels like. This has been a direct impact on inflation. And it's also caused rates, the 2-year to skyrocket, the 10-year to skyrocket. There's been so much going on because of the Strait of Hormuz and Iran and whatnot. Does that mean just as fast as all this stuff hit the fan, will it unhit the fan? I don't know. I'm hoping so. I hope that turns out to be the case. Quote from or a tweet from Charlie Bilio. The S&P 500 technology sector relative strength versus the broad market is at its highest level in history, above the peak from the March 2000. So levels far above that. And of course, everything ended up swimmingly. Everything ended up just amazingly, right? Maybe not so much. All right, let's take a look at the market today. Like I say, pushing up a little bit today. NASDAQ the same. Remember, stonks only go up. The VIX is falling once again back into this base case level. There's no risk in the market, is what the VIX is saying. Listen, stonks only go up, and there is no risk in the market. That's exactly how you should read the price. Okay. So what's there to worry about? Well, there might be a little bit to worry about, because if we take a look at the RSP, this is the equal weighted S&P 500. This has not hit a new high since February 12th. It's pulling up a little bit today, which is good. We want to see overall market breadth starting to turn around. And in fact, if we look at a map from today, a decent performance all around except for Walmart. That's getting hit from earnings. Decent performance all around. Nvidia pulled back some, just a tiny itty bitty baby bit, and that did not detrimentally impact the market, which is a good thing. But let's look at the RSP compared to the SPY. And we can see the RSP has not hit those new highs since February 12th, while the SPY has run like gangbusters. And what that means is been a very strong concentration in just a handful of stocks. Now, if we go to the daily chart of RSP divided by SPY, there we go. Just a few days ago, this was at its lowest level ever. Lowest ever level. So what does this mean? When this falls, as the market's been rising, narrow leadership, you got to be selective and have lots and lots and lots of caution. But I mean, we still have that buy signal in place on the SPY, pushing up even higher. We still have the buy signal in place on the Qs, pushing up higher and higher and higher. And we've got a decent amount of breadth coming through. Everything should be great, right? Everything should be great. Let's go look at the put call ratio today. You know what? Pulling up the opposite direction of what I expected. I figured this would be back into the aggressive call buying like it was yesterday. Which where I'm going at with this is the extreme bullish sentiment that we've seen, how there's, quote, no risk in the market. Stocks only go up, right? The aggressive call buying that we saw here makes me so unbelievably nervous. Let's go to MMFI. This is the percent of stocks above their own 50-day moving average finally is starting to turn around. And the percent of stocks above their own 200-day moving average finally starting to turn around as well. So this is actually a great sign. But then again, we're still at 55% on the 50-day, 52% on the 200-day. Let's go take a look at the new highs and new lows, also turning around in the direction we want to see. New highs is pushing up slightly today. New lows is pushing down a little bit today. So this is good. There's definitely some constructive nature happening under the surface today. Let's go take a look at the dollar index. Now, let's go take a look at rates. Now, as we talked about a minute ago, with Iran happening, rates just skyrocketed ever since that point. And they're starting to pull down a little bit, This is basically the 2-year is saying that inflation is back on the table. The 10-year, this is where this is basically the risk-free rate. So as the 10-year rises, people are going to be taking money. I really should say institutions, because nobody's taking their money out to go in a 4.5% on the 10-year. But institutions would be moving money out of stocks and into bonds, and that's how it puts pressure on stocks. Then let's go to the dollar index today, hovering close to this 100 level, this 100 breaking point right here. And as this rises, this puts pressure on commodities like gold and silver. And you can see right here as the price of the dollar has gone up, this has definitely been impacting both of those two. But of course, oil is its own game right now. And so it's really not impacted by the dollar. It's more impacted by all the political stuff that's going on with the Strait of Hormuz. Let's go take a look at the risk on sectors. And then we're going to take a look at several of your favorite stocks here real quick. The tech sector pushing up higher today. That's good. The communications sector, pretty flat, has been flat for a hot minute. The discretionary sector also pushing up higher as well. And then the financials starting to catch a little bid right here. So these are the risk on sectors, and pretty much overall, they're seeing a lot of strength. Does that mean they're rotating back out of the defensive sectors? Well, interesting note, we've been pushing up higher and higher and higher on staples. And finally, the utilities actually started to grow, and it's growing today. Now, this is interesting, right? This is interesting because these sectors are usually the defensive sectors where people go to get money out of the market. But it seems like they're putting money there, and they're putting money in the risk on sector. So just something to keep in mind. What's my overall score for the day? Overall read for the day. It's been in the choppy to sideways for the last couple days. Cautiously bullish. Hey, this is a new one. Cautiously bullish. Let's see. How do we get an upgrade? Sector leadership broadened today. That's great. All right. So that's actually what I was just talking about a minute ago. Sector leadership has broadened, which has put us into the cautiously bullish camp right here. So since we're cautiously bullish, let's go take a look over at the different parts of the market that we could look at. Here's the breadth inside of OVTLYR. You can see less buy signals and more sell signals. And we still are pushing down this trend of more downtrends and less uptrends. Now, I want to take a look at what's going on over at Wall Street Bets, and I also want to take a look at what's going on the U.S. exchange volume leaders, right? If you look and find stocks that are on both of these lists, could be a great opportunity for you. So looking at one of these, of course, Nvidia is the number one thing to talk about. Got a buy signal right before earnings, and as we just talked about a minute ago, Nvidia's down a little bit today, NVDA. Down a little bit today. You can see my notes from where I had a chart on. Oh, hang on. I don't want that view. 2 seconds. You can see where I had a trade on in Nvidia. I have to go back to it real quick. A few weeks back. Ended up being a pretty good trade. There we go, right there. Ended up being a risk-free trade for me because I rolled my options. Now, be sure you subscribe because every single trade that I put on is done live here on YouTube. So you want to make sure you subscribe so you don't miss out. So yeah, Nvidia's pulling back a little bit today. Now, it's got some things working against it. First, the tech sector has been getting less greedy, more fearful. The tech sector is showing bearish breadth with a lot of sell signals coming through, not very many buy signals, but a little bit more uptrends. That's what we're seeing right here. So Nvidia's it's trying its best here, but with the sector not being as strong as it was, it could be difficult to get over. And then Intel also got a sell signal back on March 11th. March 12th. Okay. Let's go to Intel since then, INTC. Now, an absolutely tremendous move from the buy signal back here in April to the sell signal here on March 11th. Huge. This is what you're looking for. This is what you dream about. Now remember, I want you to remember this. Take it to your grave. Remember, all stocks are bad, but every once in a while they act right. This is the case with Intel. It was a bad stock for a long time, and then it acted right. Your job as an investor, as a trader, is to be in when it is acting right and out of the way when it's not. And again, the buy and sell signals show you right exactly where it was. Super, yeah. Holy top candle, literally top candle sell signal. I like that. For only 82 cents a day. Now, one thing that we are including in OVTLYR in the very near future, which I'm so stoked about, is I gotta say it correctly. It's a very sexy name, so I'm trying to make sure I don't get it right. I believe we came up and nailed the name down as the sector intelligence tool. Oh man, how sexy does that sound? So this is what I'm trying to tell you guys. I'm so excited about the sector intelligence tool, because this is basically going to predict the future. Now, Chris, that's a big ask. Now, we just showed you what those buys and sell signals look like on several of these stocks. Imagine if you could see the top down on every sector. Now, the way that this is going to look, we're getting some inspiration from FinViz, is it's going to look something like this. You go to, where is it at? Is it Screener? No, it's not Screener. Groups. It's going to look similar to this, where you're going to be able to see the performance of all the sectors, right? And all the industries, okay? And then you're going to be able to say, well, hang on a minute, which industries are actually showing me the best performance over the last week or so? So you'll be able to sort by there. Then you can either look at the sector, or you can look and drop down into the industries, and then you can see the buy and sell signals as they're changing from there. I am unbelievably excited about this, because one of the best ways to trade is to be with the trend in a strong group. Now we're going to be able to slice into the sectors and see which group, which industry is working the best. Like today, or this week, I should say, footwear and accessories is doing really well. I don't know why. I don't really care why, but there's a huge opportunity here. So you'll be able to click into that, and you can see which ones have buy signals when the sell signals and buy signals come through. And this is something we're actively working on. We had a meeting on it today, trying to iron out all the details. So this will be coming very soon. And I want you to come back very soon. Be sure you subscribe. That way you don't miss anything to help you save time, make money, and start winning with less risk. So click one of these two videos, and we'll talk soon.